Hello guys, welcome back to ICT Trading Concept. How are you all? I'm very fine. Before going to the video, I would like to say something. Actually, I'm a trader. I really don't know how to attract people. So what I'm doing here, I'm actually giving you the entry setup or trying to make the ICT concept simple. Okay. So I really don't know how to make it more attractive, but if you watch the video, you will be benefited for your trading journey. Maybe it is not for entertainment, but to be honest, if you really love trading, this video is for you. Okay, so that's the introduction. So let's go to the video. What will you learn from here? You will learn another strategy for using the fair value gap, and this strategy will help you to determine so many entry setup. Whenever you would like to take an entry, you can take the entry depending on this strategy. Okay, so I'm going to use the 15-minute chart and for the direction, and I will go for the execution in 1 minute chart. Look at the price action over here. Actually, it has traded this opening new opening gap, and then it has given me the very nice market structure shift over here. Sorry, if you just mark this one as your sorry, not this one, this one as your market structure shift. If you are confused about the market structure shift, I will put a link to my description so that you guys can watch that video, how to mark the swing high or swing low for shifting the market structure. It is very important, don't avoid that. Okay, so when I got this market structure shift, this is my parallel gap. So price actually came to this parallel gap and then went lower. Okay, now I'm not telling you about the 22 YT model. I'm gonna give you another strategy to use the parallel gap. In that case, you need to get the rejection from the consequent encroachment of the fair value gap. Okay, nobody can close above the consequent encroachment. It has to reject it from the consequent encroachment. Yeah, we can go higher. I am not concerned about the wick, but I am concerned about the body. So when I got this rejection from the body, I will wait for the next time when price will come back again to the lower part of this fair value gap. When it will come back again to the lower part, I will go to 1 minute chart and I will look for it setup over there. Okay, so just remember, this is the 15-minute fair value gap, and this is the first time when price came to the lower part of this fair value gap. Now I'm going to the 1 minute chart. If I come to the 1 minute chart over here, you can see this is the first time when price actually come over here to the lower part. Now I will wait for the setup. When price came here, it has to take some liquidity in 1 minute chart, and I can see it has actually taken this liquidity from 1 minute chart. So this my buy side liquidity has taken. Now I need the market structure shift, and I got it from here. So this is my market structure shift. I will just mark this one as my market structure shift. This is very simple concept, guys. If you can understand this concept, you will be benefited. Trading will be very easy for you. Okay, when I got this market structure shift, I have to mark the fair value gap. So I will mark this is my fair value gap. So I'll mark it until here. So that is my fair value gap. I will take my entry to that fair value gap. Why I'm going to take this entry from this fair value gap? Because from 15-minute chart, I got the rejection here from the consequent encroachment, and when actually price come back again to the lower part of this fair value gap, I am confident that market will go lower and take some kind of liquidity. So that is the whole concept from higher time frame. I mean the 15-minute time frame, guys. It is, I'm getting it much more easier for you. So that should be your entry point. And when I got this market structure shift after taking the buy side liquidity, I will take my entry over there, and my stop loss will be just above the swing high. Okay, so that is my swing high. And if you want to put above the this high, that is also acceptable. I mean this high, that is also acceptable. And now I need to look for the the sell side liquidity, where you will take your sell side liquidity. You can see there is some sell side liquidity above here, below here. This is your sell side liquidity, because these two lows are relatively equal, this low and this low. This is also your sell side liquidity. There is another thing over here, and that is the volume imbalance. Volume imbalance, if you watch my previous video, you know volume imbalance is also kind of the sell side liquidity. So the liquidity. So you can mark any of them as your target, but I prefer to go with this sell side liquidity. I prefer that. Okay. And if you really would like to keep over here, then you can see you have to wait for far more time. You see, you have to wait whole the time. You can do, I will show you something else over here, but I will go for this sell side liquidity over here. Okay. And also if you mark this low and this low, they're relatively equal low, so you can put I mean below these lows as your sell side liquidity as well. You can do that. Actually market has taken the sell side liquidity from here as well, but I prefer to go for this sell side liquidity because these two lows are very clean, very equal, so I will go for that. And if you would like to see the risk reward ratio, is as you see from my previous video, the risk reward ratio was near about 1:6, 1:7, but here the risk reward ratio is 1:1.3. But if you go for the volume balance, it is near about 1:1 point, 2. Okay. It's up to you, whatever you want to do you can do. I mean, this is the money management thing. It is up to you. How do you mark your drawn liquidity? It depends on you. So I'm not gonna talk about much more thing about the money management. Okay. But here is the first entry. Now look, when price actually came to this fair value gap, it went higher a little bit, and it has traded the lower part of the 15-minute fair value gap one more time, but it never break the high. Okay, that is the concept. When you will get this strategy, you will use this strategy. You have to believe that market will go lower and it will take the sell side liquidity. And then when price actually came here, and it has actually made another sell side liquidity from this low and this low. Okay, just let me mark the lows. Okay, no, I'll go for the most obvious liquidity. This is the most obvious liquidity. You see this low and this low, they are relatively equal lows, and this is the most obvious liquidity. It is here, and there is another sell side liquidity from here as well. So all of this sell side liquidity is will be targeted depending on this strategy. Okay, so when next time price actually came again one more time to the lower part of the 15-minute fair value gap, you can see it has taken the buy side liquidity one more time. Okay, so this is the buy side liquidity has taken. Okay, so I'll just mark it as my buy side liquidity, and then it has given me the market structure shift. And now where is my market structure shift? Can you tell me where is my market structure shift? This is my market structure shift. This specific candle is my market structure shift. Why I'm just marking this one as my market structure shift? Why not this one? You have to watch that video. It is very important, guys. I am recommending you again and again to watch that video, how to mark the market structure shift. I will put the link to my description. To be honest, guys, if you watch that video, if you can understand the whole concept, trading will be much more easier for you, and it is what it is. Okay, so when I have marked this market structure shift, I will start to look for the fair value gap from above here. Okay, so where is my first fair value gap? I got the fair value gap over here. This is my fair value gap. Now you can see it has actually traded one more time. I mean, price actually came to this fair value gap before. So why I'm going to mark this fair value gap again? This fair value gap is not balanced. Okay, where until it is not balanced, I will keep that fair value gap for reusing. And now if you ask me what is balancing fair value gap, I have also made a video, and I will put that link as well to my description. So you can watch that on when I get the balance price range, or how I mark the fair value gap. Okay, so you have to take your entry over here when it will price will come over there. You have to take your entry over there. Now where do you put your stop loss? You have to put your stop loss above here. Why? It is because price can come again to this area, but it will never break this high, so you can put your stop loss above this high. Okay, and now where will be your target? You see this relatively equal loss, they should be your target. That should be your target, because this is the clean sell side liquidity, this low and this low. There is no another sell side liquidity which is very clean. Okay, there's nothing, but you have to take some partial below this lows. You have to take some partial over here and over here, because this is also very clean sell side liquidity. So you have to take some partial in that two place. And if you go look for the risk reward ratio, it's near about 1 to 3.39, yeah, something like that. So that is better, I think, and that should be your anxiety. So what is the theme of this video? You will wait for from the 15-minute chart. When you will see the setup happen in 15-minute chart, it has taken the buy side liquidity from here. Just let me mark the buy side liquidity as well. So it has taken the buy side liquidity from 15-minute chart, and then it has given me the market structure shift. This is the fair value gap. There is no two fair value gap, there is only one fair value gap. So I will use this fair value gap as my direction. Okay, if there was two fair value gap, that would be different. Please watch the previous video. I will put that video's link as well to my description. You will understand how to use two fair value gap. And here is the one fair value gap. So I will use this fair value gap like this way. It has to reject from the consequent encroachment and from the 15-minute chart. If you go to the 1-minute chart, you will see the the rejection in 1-minute chart as well. And when it will reject this fair value gap, I will wait to come back again to this fair value gap lower part. When it will come back again to the lower part in 1-minute chart, I will wait for the setup in 1-minute chart. Okay, so it has taken the buy side liquidity, gave me the market structure shift. This is the fair value gap. You will take your entry over there for some kind of sell side liquidity. It failed to take the highest liquidity. So from 15-minute chart, you can see from the 15-minute chart, where is my liquidity? Here is my liquidity. This low and this low, they are relatively equal low. So this liquidity is from 15-minute chart. That is much more obvious from 15-minute chart. So I'm expecting price will take that liquidity. Okay, but I am not gonna target my trade to the 15-minute liquidity. I will target my trade to the 1-minute liquidity. Okay, so from 1-minute chart, this is the most obvious liquidity. So that should be your first entry. And when it came back again over here, gave me the same setup, taking buy side liquidity, market structure shift. I went for the first fair value gap, uh, just over here. It is over here. So I will take my entry to that fair value gap, and I will go for 1-minute chart liquidity. Okay, now I would like to show you in 1-minute chart how it has been rejected from the consequent encroachment. Okay, so this is the first time when price actually came here. Look at the candles over there. Everyone is rejected from the consequent encroachment. Nobody closed above the consequent encroachment, and this is the fake breakout. So I talked about this breakout as well to my live streaming. If you ever join to my live streaming, I know you are already benefited from there, because if you ever join to my live streaming, you can't leave me alone. Okay, you will keep attending to my live streaming, I guarantee that, because the people who are with me, they are learning so many things. If you don't believe, you just join one day, you will understand why I am telling you this so confidently. So I got the rejection from the consequent encroachment. You see, this time it failed to come to the low. When it didn't come to the low, I have no entry. I don't actually bother about this type of setup or something, anything. I'm not getting bothered. So there is some other setup over here. I showed them in live to my live streaming, but I am gonna give you the most obvious setup over here when price actually came first time to the lower part of the 15-minute fair value gap. So that should be your entry from 15-minute, from 1-minute chart. And guys, it is very easy in my opinion, but if you have any confusion, you can comment below. You can write down your confusion or doubts. I will always reply you. You can believe me. So I really reply you. Please subscribe to my channel if you are new, share my content and give me a thumbs up. See you guys. Cheers.